We are continuing lesson 1 on issue of shares. The next part of it is about the accounting of issue of shares. How does the accounting work in at the time of issuing of shares? So before we go into the accounting, let's understand the sequence of issue of shares. So the sequence of issue of shares is, first thing which happens when you are issuing a share is 1. Receiving applications for shares. A prospectus is issued by the company inviting the public to subscribe for its shares. Advertisements are given in leading newspapers and magazines with extracts from the prospectus. Application forms are made available freely. Members of the public have to fill the application form and submit them to the company along with the specified applications. So first the company receives the applications for shares. That is the first step. Second step is allotment of shares. Like I explained in the example in the previous section, let's say 1 lakh shares are going to be issued at rupees 10 each for a total capital of rupees 10 lakhs. The company will receive the application for those shares. So it can be any number of applications depending on how many denominations each person is trying to apply. Let's say I apply for 100 shares, so I will be filling up one application form, applying for 100 shares at rupees 10 each by paying 1000 rupees. That is 100 shares into rupees 10, it will come to 1000 rupees. So I will be applying for one application for 1000 rupees. Likewise, so many applications will come that will be received by the company. The second step is allotment of shares. So what happens is there will be a period for it which the applications are collected. Let's say issue of shares is open for 3 days or 4 days or 5 days, whatever the period the company decides. In those 3 days or 4 days only, they will collect the applications, and at the expiry of those 4 days, company will start allotting the shares based on the subscription. Like I mentioned, let's say the company wants to issue 1 lakh shares, depending on how many got subscribed. Let's say the company got subscription for 1,10,000 shares. Then the subscription is oversubscribed. So in such cases, the company, like I mentioned, company can choose to refund the remaining 10,000 shares application to the last, that is first in first out method. After the 1 lakh shares, whoever has applied, they may return it back. But usual practice is the allotment of shares is done on pro rata basis. So that is in case of oversubscribed. If the issue is exactly subscribed, that is the applications are received are exactly 1 lakh, then the company will allot shares to everyone. If it is undersubscribed, that is if they have received only 90,000 shares application, then they will allot for all the shareholders, all the prospects. They will allot all the 90,000, and the 10,000 will be unsubscribed capital. Okay, so that is under subscription. So now let's understand there are few elements in the entire thing. So there can be calls in arrears and calls in advance. For example, when they are issuing shares, sometimes some shareholders, some applicants, they may not pay the full money. That is, if the shares are issued at 10 rupees, they pay only 8 rupees instead of 10 rupees. So that is called calls in arrears. That is, they are paying short of the total amount what they have supposed to pay. Or there can be calls in advance also. That is, for a 10 rupees equity share, first call the company may make is, first you have to pay only 2 rupees. The remaining will be collected after allotment. So that is also an arrangement a company may choose to do. So in such cases, an applicant may choose to pay the full money also. Instead of 2 rupees, he will pay 10 rupees. So that is called calls in advance. So we will learn all of this by understanding the journal entries in the books of the limited company when they are issuing shares. Let me run through all the journal entries. Listen carefully in each one of them. The first entry being when the share application money received. So when the share application money is received for X number of shares at rupees X, the entry will be debit bank account to share application account. Share application account, that is the first entry. Second entry, for at the time of allotment, transferring the share application money to share capital account. So the entry will be share application account debit to share capital account. Third entry is in case the shares were rejected and refunded, the entry will be share application account debit to bank account. Fourth entry is in case excess application money were received and that can be kept for share allotment, then the entry will be share application account debit to share allotment account credit. Number 5, being the share allotment money due for X number of shares at rupees X each, and also if there is a premium. That is, I just want to clarify, let's say 10 rupees is the equity share. First part can be share application money, which can be, let's say, 2 rupees. So at the time of application, whoever wants to apply, they will pay only 2 rupees per share. And once the allotment is done, then the remaining money, let's say 8 rupees has to be paid. So that can be called as one go, and whoever got allotted, they have to pay the entire 8 rupees, or that it can be in installments also, that is call 1, call 2, call 3 and so on. That is, call 1 can be 3 rupees, call 2 can be 4 rupees, then the final call, the call 3 can be 1 rupee. That is 2 plus 3 plus 4, 2 plus 3 5, 5 plus 4 9. The last call, final call can be 1 rupee. So it may be collected by installments. Depends on the arrangement in which the company wants to source the money from shareholders. So for each stage, first we have to create the accounting entry, then collecting entry. So the first entry, what I said, at the time of receiving the application money, the entry is bank account debit to share application account. The second one is when it is allotted, the application money gets transferred to share capital account. That's only at the time of allotment the application money will go. So that's the second entry, share application account debit to share capital account. The third entry is in case the shares were rejected, then share application account debit to bank account. That is, when the rejection happens, the money has to be refunded. So that's the entry for that. The fourth entry is in case share at the time of collecting the share application money, if someone pays excess money towards share allotment, then the entry will be share application account debit to share allotment account. So share allotment account will be credited towards to the extent of amount collected in addition to the share application money. Fifth entry, when the allotment is due, when the allotment money is due, then the entry to be passed is share allotment account debit to share capital account. In case there is a premium, we also have to credit the premium amount by crediting to share premium. So the total entry will be share allotment account debit to share capital to share premium account. The sixth entry will be at the time of collecting the share allotment money, then the entry will be bank account debit to share allotment account. In case some shareholders did not pay, then what happens is the entry will be bank account debit, calls in arrears account debit to share allotment account. So whatever the amount is not collected will go and sit in share allotment account. The next entry is when the share first call is due. The entry will be share first call account debit to share capital when it is due. When that money is collected and some shareholders did not pay that first call, the entry will be bank account debit, calls in arrears to the extent of, shares first call account, sixth entry is bank account debit, calls in arrears account to the extent of amount not received, debit to share allotment account, being the share allotment money received except for X number of shares. The seventh entry is transferring the share first call, sorry, we discussed 8th entry already. 9th entry is, let's say the share second and final call is due. Then the entry is share second and final call account debit to share capital account, being the second and final call money due. You will understand all of this when we learn the illustration. I am just reading out the journal entry sequence. The 10th entry is when the money collected towards the share second and final call, except for few people who may not be paying. The entry will be bank account debit, calls in arrears account debit to share second and final call account. The 11th entry will be in case if some of the shares are forfeited. What is the meaning of forfeiture? Forfeiture is nothing but, let's say 10 rupees shares issued, first at the time of application applicant has paid 2 rupees and allotment also done, but if that person do not pay the remaining calls at the time of allotment or at the time of calls made, call 1, call 2 and final, at any stage if any applicant did not pay the remaining amount, the entire shares will be forfeited. Forfeited means cancelled. So what will be the accounting entry for that? At the time of forfeiture, the accounting entry is share capital account debit in case the shares were issued at premium, share premium account debit to calls in arrears credit, that is to the extent of amount not paid by the shareholder, that should be credited, and to share forfeiture account to the extent of amount collected will be credited to share forfeiture account. So effectively what happens is whenever there is a forfeiture, that entire amount of capital also gets reversed and whatever amount collected will be sitting in share forfeiture account. The 12th entry is in case there is no premium, then the simple entry will be share capital account debit to calls in arrears account to share forfeiture account, being the dash shares of so and so were forfeited. 13th entry, the company also has an option of reissuing the forfeited shares. So the entry for that is bank account debit, share forfeiture account debit to share capital account, being the dash shares were reissued at rupees dash per share as fully paid. Number 14, in case there is any additional surplus amount in the share forfeiture, that needs to be transferred to capital reserve. That entry will be share forfeiture account debit to capital reserve account. Number 15, this is the entries for calls in advance. So whenever there is any money received in advance, the entry can be bank account debit to calls in advance, amount received in advance for calls. You can do this way, and at the time of actual amount call due, that time you can reverse this by calls in advance account debit to share first call account, share second call account, share final call account as applicable. The 16th entry is whenever there is a calls in advance, company can also choose to give interest on them. So the entry for that is interest on calls in advance account debit to bank account, because the shareholder is giving money in advance then required. So that's the 16th entry. So these are the variety of accounting entries which needs to be passed for issuing of shares. We will learn how to account for this through various illustrations. So there are, I am looking at the number of illustrations, there are about 6 illustrations are there. No, 7 illustrations are there. So we will go through each one of them as we learn about them.